Now, Egypt's investment ministry has submitted to cabinet all the necessary bylaws to the recently ratified investment law. Now, this aims to create more incentives for investors. The investment minister, Sahar Nasr, said that Egypt actually did get $6.8 billion in foreign direct investment in the first 4 months of 2017. And the ministry expects more than $10 billion worth of FDI in the next fiscal year, which incidentally just starts in July. The bylaws were drafted by the ministry's Executive Regulations Drafting Committee. The ERDC took suggestions from a range of ministries: Interior, Agriculture, Supply, Manpower, Environment, Local Development, Finance, Social Solidarity and Tourism. The new law is expected to cut bureaucratic red tape significantly, particularly for fledgling projects. Let's get the latest details on what exactly all of these regulations do mean. Yasser Hakim joins us now live from Cairo with more data on this story. Yasser, bring this down to things we can relate to. What red tape exactly do these regulations cut and clear out of the way for potential investors?
Yes, Rama, it's a very crucial issue here and has been the main obstacle for investments in Egypt, whether local or international or foreign investors. Now, you mentioned something like 8 or 9 ministries that have basically not much to do with investments. But if you are an investor and you wanted to come and invest here in Egypt, before you open a project or take or decide you want to have a factory, you must get an approval from all these ministries, and you have to go yourself around the buildings and meeting all those employees working there and getting all these stamps, more than 50-60 stamps, and each stamp will not be obviously given to you on the same day. You have to wait a month or 2 for each stamp to get done, and takes years. Then the government decided to take another step, which is the one-stop shop, and this had a problem in itself, because the government said the investor will go to this one place and give in and submit its request, and the government would go ahead with all these different agreement or different stampings and approvals from the different ministries. But it still would take time, because this person will go around the same circle to get all these stamps instead of the investor. And it takes the same time. Yes, the investor is staying at home, but he's staying for years at home to get the approval. And the latest investment law is actually doing it the other way around. They found out that instead of doing all this, they have put forth a plan of all the land in the country that is ready for investment with all the paperwork done. All the investor has to do is go submit its request, choose the piece of land he wants, and takes it and start work immediately.
Indeed. These bylaws, as you mentioned, input from several ministries, but they do leave the main tax incentives provided by the law, like the exemptions on import duties, for example, and customs duty. They do leave all of those intact, don't they?
Yes, but of course there are some incentives concerning the geographical location. So every investor will be given a paper, a document saying which areas, if he invested in, he will get 0 tariffs, or he will not pay any taxes for 5 years. And that's mainly in Upper Egypt, in areas that there is potential, but there's not much investments, because most of the investors have gone to the areas that are close to Cairo, close to the main cities. But these far from the main cities areas actually have a lot of potential. They have a lot of employees that can work. There's a lot of good land, and they're opening up these areas for investments and therefore incentives. So it depends on where you're located and also which type of investment you're going into, where you can get the incentives you need out of the tax system.
Indeed, some pretty interesting numbers coming from the investment ministry as well. A forecast of $10 billion worth of foreign direct investment coming in the next fiscal year, 17-18. What sectors are most attractive for that $10 billion worth of FDI?
Egypt is looking for the renewable energy. Obviously, there's a lot of sun in Egypt. The weather is perfect for renewable energy, for all these desert areas that can be the good location for renewable energy. So that is one. Egypt is a world-known country for cotton. However, the textile industry and cotton has deteriorated in the last few decades, and Egypt wants investments to rebuild this huge sector of textiles. You've got petrochemicals, only $7 billion of petrochemicals, whereas all research shows that Egypt has the potential to more than double the investments in petrochemicals with all the necessary structure here, and the raw material as well is available. So those are some of it. Obviously steel as well. Most of the FDIs that came on those 6.8 are also in the real estate. But Egypt wants to go more into manufacturing, more into products that can be agricultural products that can be exported and bringing more revenue, not just real estate. So that's another target by the government.
Indeed. One last question for you, Yasser. That $6.8 billion of FDI that flowed in between January and April. It's quite a bit of cash that came in. There's a lot of reforms that happened on the currency side and also, of course, on the investment regulation side. So the forecast for $10 billion for the next fiscal year, I mean, doesn't that seem a bit low given that we've managed to get $6.8 billion in just 4 months?
Yes, it's all about the investment law and the facilities that Egypt is providing. If you look at before or the first 2 quarters of the 2017 fiscal year, there was not much action concerning that. And yes, there was a lot of good promises, but there was nothing on the ground. And once it was known that the investment law has been ratified, some of these incentives have already been put in place, not waiting for the investment law. And that's when the regulations have improved and investments started to flow in. And that's what we've seen in the 3rd quarter, and we expect to increase until the end of the 2017 fiscal year, which ends in July, and then even more after July when the investment law is fully intact. So yes, they will not achieve the targets of 2017-2018, which ends in July of this year, but starting July and then to July 2018, I expect that the investment, the FDIs will increase and even could exceed the $10 billion target set by the government.
Indeed. We'll see how that plays out. Thank you for your input. That's Yasser Hakim, of course, live there in Cairo.